Welcome, everyone. I'm Susan Murray. I'm one of the partners at Trust Associates. And on behalf of my colleagues and the team at Edison, I'm delighted to welcome you to the first webinar of 2021, where we'll continue to focus on the topical issues affecting investment companies. We're delighted to have three speakers joining us today. We have Moira O'Neill. Moira is an experienced editor, media and communications specialist, and is head of personal finance at Interactive Investor. She's also an FT columnist. Mickey Morrissey. Mickey is partner at Smith and Williamson and previously worked at Merrill Lynch and Lion Trust. He was recently appointed to the board of the AIC. And thirdly, Gay Collins. Gay founded three PR companies, including Montfort Communications. She advises financial services companies on communications and is a non-exec director of JPM Global Growth and Income and senior independent there as well. She's also on the board of the AIC and was a founding steering committee member of the 30% Club. Now, before we start today, just a couple of housekeeping points. Each speaker, and for those of us who've joined us before, you'll kind of know the format by now, but each speaker is going to speak for around 5 to 10 minutes, leaving plenty of time for questions at the end. And we're going to aim for a finish time of around 11:45. If you would like to ask questions, and please do, use the Q&A tab at the bottom of the screen, and we'll do our best to cover just as many of them as we possibly can. Now, the focus of today's seminar is attracting the retail investor, a big subject. Before we ask our panelists to speak, we thought it'd be interesting to get some input from you, our audience. So could those of you who are currently non-exec directors of investment companies give us your answers to the following poll questions? So firstly, on a scale of 1 to 5, with 1, of course, being very important and 5 being very unimportant, does your board have an active strategy to target retail investors? So if you would like to tell us your answer now. And we have a second question for you. It's a multiple choice this time. And if you scroll down to the right of the screen, you'll see there are 10 options. And the question is, which medium do you value most to target that audience? So again, if you would like to answer that now. Let's give you a little bit longer to do that. We're going to share the results of the poll at the very end of the webinar, and I'm sure we'll all be interested in the results. Okay, right. Well, without further ado, I'm going to pass over to our first speaker, Moira.
Thank you, Susan. So I'd like to just thank you for the introduction, but also to mention a few of the things I've done during my career. So I've worked on Investors Chronicle, which was a retail investor audience. I've also worked for two retail magazines, which sadly no longer exist, so MoneyWise and Money Observer. So over the years, I've seen how retail investors interact with content and engage with it. And I think there's been a huge amount of change, even just within the last couple of years. So if you move on to the next slide, we have at Interactive Investor about 350,000 customers, and we also reach retail investors through our newsletter channels, which people can sign up to get our free information and education around content. And we also reach retail investors through our social media channels as well. So we have a very wide audience. We publish articles, content, information around all different types of investments. So we have UK shares as well as funds and investment trusts content. We used to have a lot more readership of shares, but actually the funds and investment trust content has caught up in the past year. So they're pretty even. In fact, funds and trusts and ETFs content is now punching above its weight. So it's getting just as much eyes on it as the shares content. In January and February, we had more than 1 million page views for that particular part of our content. Investment trust page views were neck and neck, really, with open-ended funds content. And I've pulled out a few of the popular articles around investment trusts, so you can see the titles of those listed. Now, what's really important with engaging content for us is our influencers. So we have Ian Cowie is our headline columnist in this around investment trusts, and you can see that some of his columns have ranked there in the top most popular content. We also have Kyle Caldwell, who's got a very good track record of writing in this sector. He's won a couple of AIC awards, and he is the editor of the section. So he's learnt over the years that articles that are around lists, so we've got worked really well. So 11 investment trusts, top 10, 28 trusts that would have created ISA millionaires are really good ways of pulling people in. Also thematic content, so tech, income, big themes to watch, they all draw people in and get people's interests. And you know, we have to just experiment with headlines, but we've started we need to know what works for us. And also inevitably popular trusts do well, so Scottish Mortgage inevitably is up there in the list too. If you move on to the next slide, we have really looked at what our audience is across the last year. And in fact, we launched a private investor index where we wanted to look at who was engaging with our content, who was investing, and how well these retail investors are actually doing. So you can see we monitor performance across 2020, and the youngest investor age group actually performed the best. So they scored 8%, and we can see what they were holding to deliver that performance, which may surprise you, because those 18 to 24-year-olds were actually holding the highest amounts in investment trusts. And we don't know the answer.
Hi, I think we might have a problem with Moira's. Moira, are you back with us?
Oh, am I not with you?
Sorry, I think that may be cut off a little bit. So yeah, just for the last sort of 30 seconds or so. Okay, Moira, I think we what we might do is, at the risk of messing this up a little bit, I wonder if I might sort of get Mickey to talk now, and then we might go back to Moira. I am sorry, everyone. I think we're having a few techie problems here. Mickey, I wonder if you would mind starting your session. Would that be okay?
Absolutely delighted to, yeah.
Great, thanks.
Thanks very much, Susan. There we are into tech issues. What would we have done 10 years ago if the pandemic had arrived then? Many thanks, and thank you for this fantastic turnout. Over the next few minutes, I wanted to do is to contribute to perhaps how we encourage retail investors to invest and support investment company sector. I want to look at the role that the direct-to-consumer platforms play, the direct-to-business platforms play, and actually the IFA market, and also leave you with a key message. So this is just by thanks to Piers Curry at Warhorse. This is by way of a reminder over the last 10 years where we've come from, or 20 years, many years back, institutional investors, when I was at Mercury Merrill Lynch, holding investment companies, investment trusts. More latterly, companies like myself, Smith and Williamson, our peer group at Bruins, Rathbones, very much a feature on the investment trust share register. But I think it's really the last 5 years, maybe 6, 7 years, where we've seen this big move towards platforms. That's so important. Having said all that, investment companies are still demand driven. We have to create collectively that demand, whether it be through the asset management firms themselves, various different websites, the press, PR that you can engage. We do a lot of work, as you will know, at the AIC to raise awareness of investment companies. I suspect, dare I say, over the last year, 2020, Scottish Mortgage probably did more than all of us combined to raise the awareness in that sector, or in our sector. And just a quick word, when I was at Lion Trust in the early days, we never actually advertised. That was our sort of policy, but we grew very fast. And one of the ways that we did that was we spent our time and resource engaged with public relations and the press, and just getting to know them, because I think the feeling we always had was that a good comment, a good article in the Saturday Telegraph was worth quite a lot more than a corner advertisement on the back page. I mentioned to do direct to consumer platforms, and really the question I wanted to ask and hopefully answer for you is, what can you do to help in this area? And I think it's pretty straightforward. I think it's maybe you can challenge or discuss with the investment management companies you work with exactly what their relationship is with both D2C platforms and D2B platforms. And I'll come back to that in a second. Just before I finish this little bit here, I wanted to mention briefly that in our company S&W, or Smith and Williamson, some of my colleagues have worked the last couple of years with what we call young professionals, albeit they may be young professionals based perhaps city in organizations, but they have enough spare savings, shall we say, and are interested. And so we can look after some of their money in a service that we have on our desk, which is for the smaller investor, which includes investment companies, which is very unusual. But really the point I wanted to make was that most of these young professionals also have an execution-only portfolio, either with somebody like AJ Bell or Hargreaves Lansdown. I happened to bump into one virtually last week, a young lady, and she said just that her and her partner did invest in investment companies, and they had it on a direct to customer platform. And then finally, I guess on the platforms, as a friend of mine at Merrill's once said, it's great, isn't it? Just put your funds onto a platform, you get lots of money. That is exactly not what happens, if you see what I mean. We move on to slide 2. Sticking with the platforms area, but also looking at financial advisors. I thought it was interesting to see that since the Retail Distribution Review in 2012, increase of advice on investment companies has increased significantly to now over $1 billion a year is invested this way. It may not be that financial advisors are have all the best knowledge, and in fact, I think some people write them off at their peril. There are 25,000, and just writing them all off would be a little bit like saying that, you know, all the politicians are criminals. It's obviously not exactly the case. Even if it was 1/25 that were really engaged in investment companies, I think it'd be worth having. And they do have client contact. And if a client has read an article in the press at the weekend and comes to see their advisor and says, I'm really interested to know more about this, I think that, if nothing else, the advisor should have a bit of knowledge. And on that theme, my own team has worked over the last few years with the AIC. We've gone around presenting groups of advisors. Sometimes there'll literally be 10 people there, and others will be 30 or 40, to try and increase their education. One of the criticisms that is regularly mentioned is from the advisors is the lack of support they feel they get from the asset management companies, perhaps with one exception. And no surprises that that's be Bailey Gifford. So I think fund management companies, it is not new really, could do a lot more to engage with them and support them in terms of making them understand what happens in the investment company world. If we flick on to slide 3, I'm not saying that platforms or advisors are the panacea. They all have problems. If you put 30 advisors in a room together and say, how many of you use a platform? They all put their hands up. If you ask them how many have got a problem with the platforms, they also all put their hands up again. However, platforms are getting better. This slide, care of the Langcat and the AIC, this talks about trading costs. I mentioned that on my own desk, we have a service that includes investment companies. Every platform has different trading charges, and it is a bit of a nightmare. Also, in my first slide, you might have seen a platform well known called Transact. Clients can directly invest on Transact. And of the 50 billion on that platform, 4.5% is in investment companies. The issue comes that when there is a vote or a corporate action, they do inform the clients that this is taking place, and they can vote. However, Transact will just add up all the votes, and if it's 51% in favour, then it's a yes. If it's 49, then it's a no. And so some people might feel that's unsatisfactory. I think some people look at platforms and advisors as a bottle half empty, and there are problems, fractional trading, and do they get the vote, and do they get the report and accounts? But I think you should look at it perhaps the other way and say that there are opportunities. They are getting better, and they will continue to get better in the foreseeable future. I think the whole story, if you like, I've always thought is like a jigsaw. You have to have a piece which is your performance, and you have to expect and hope that that performance is strong. But along and around that performance, you have your PR, you have your platforms, you have your asset management companies, you have your trade associations, all the little pieces of the jigsaw. And if you can get them all together, then retail investors will flock to your investment companies. And I guess my final one is my key message, which was challenge the asset management companies about exactly what their strategy and plans are with both the platforms, that's direct to consumer and direct to business, and IFAs. What is the depth of relationship? Every time, and I'll give you an example, a try is scored by Bath Rugby Union or Scotland Rugby Union, I get a text from the chief executive of one of the largest advisor platforms in the UK. It's that sort of relationship that should be looked for, because collectively we can all help to develop that world so that it makes it easier for retail investors. Thanks, Susan.
Thanks a lot, Mickey. That's great. Now we're actually going to go back to Moira. I'm sorry we had some technical problems there. And also just to let you know that we're actually going to redo the poll. I think some of you didn't have long enough to answer the questions. So after the three speakers have spoken and before the Q&A, we'll go back to the poll and give you a chance to do that then. But Moira, sorry, the unenviable task of going in halfway through your presentation, but over to you.
I'll do my best. So I hope everyone can hear me now. I was running through who the audience was. So this is based on our index of our more than 350,000 customers and how they performed last year and what they were holding in order to generate that performance. So I was talking through how the younger investors did best, and they were also had the highest holdings in investment trusts. Now they were in, racy stocks. They were buying Amazon and Boohoo and all sorts as well, but the bulk was in investment trusts. And so I think you've got a good audience there for maintaining the popularity and a base on which to grow this out. So if you move on to the next slide, I'll talk through our key content initiatives really are in the area of multimedia. Now, when we did research among younger investors, we found that they are really drawn to video, and they're using video as their main form of education around investing. And during the first lockdown last summer, across the board, the use of video went up extraordinarily. So of the time that people were spending online, a third of that was dedicated to watching video, with people literally watching hours of YouTube a day because they were bored. And I think that's really brought it into the people's psyche that they do watch this stuff, they do go on YouTube, they find interesting stuff to watch. And we've certainly really tried to push and to capitalize on that trend. So this time last year, I think we had about 2,000 followers on our YouTube channel. Now we have 16,000. We've seen some major success with the output and the increase in video content that we've done. And that has included video around investment trusts, whether it's been interviews with managers or it's been members of our content team talking around themes, lists of investment trusts to invest in or to play themes, etc. Now, the key with video has been to keep it short and snappy. So when we've interviewed fund managers, we have tended to split the interviews up into several sections and to put those out in 1 or 2 minute parts. They're always accompanied by nice graphics, funky music. We're trying to make something which traditionally may have seemed a bit dull and boring become highly engaging and entertaining. And when we've split those videos up into small sections, we've been able to use them across our social media channels, which is a really, really important way of reaching those younger audiences and shouldn't be underestimated. So if you can get a 30-second video clip and put it out on Facebook, Instagram, Twitter, LinkedIn works really well too. You can really start to grow your audiences. We've also been determined that lockdowns and not working from the office and not having access to our studio all the time wouldn't stop us doing video. So if you can see behind me, I've got a little bit of equipment here, which is a ring light, which when you film video, you can use that to give yourself a glow and make yourself look better. And lots of our team now have these, so that we're set up to have some nice lighting at home, so we can deliver to camera and just film when we feel like we can fit it into our days. And it really is becoming much more of a natural thing that we do in our day-to-day process. We're not just writing as journalists, we're filming as well. And just to end on this, we also have podcasts now. They haven't taken off as fast as video has, but we do think podcasting, audio is a key medium that we need to pursue. And we've done a lot of in-depth interviews with managers on our podcast too.
Thank you very much. That's great, Moira. And our last panelist is Gay. Over to you, Gay.
Almost started on mute. Thank goodness I noticed that bit. Hello, everyone, and thank you to Trust Associates and Edison for inviting me. I think the reach that you have in the investment trust arena is testament to the number of people that I gather are listening in, which is quite terrifying. So I want to build on what Moira and Mickey have talked about in terms of attracting the retail investor, because I think that the media is an incredibly important route and one that not every investment trust board has necessarily experimented with to date. So I really wanted to sort of drill down in terms of, how can you use the media more, and talk about how the stats suggest that media is an incredibly powerful way of getting the retail investor to actually invest in your trust. So looking at a slide segmenting the retail investor, which is the next slide, it sort of focuses on some of the analysis that Moira showed us. It's not a one size fits all. There are very different investors out there, and they react to really different types of influence in terms of the media. We've all read about the digital investor and just how the pandemic has, increased that area significantly. And then the movers and shakers, I call them, and the wise owls, who've sort of always been there. But, I think over the pandemic, the benefits of investing in investment trusts have really shown their their stripes, and the work that the AIC has done in particular, just highlighting how the closed-end vehicle has really helped during the rushes of assets in and out to the market, how that has managed to show what a closed-end fund can do and help a fund manager, and also the ability to be able to cope with the dividend cuts that have happened through the investment trust structure, being able to sometimes take from reserves. So those are my sort of 3 types of audiences, and we looked at some analysis kindly provided by Research in Finance and JP Morgan, looking at what influences these retail investors. And some of that reflects the stats that Moira was showing us in terms of the Telegraph being the favoured newspaper, the specialist investment titles also being important. And I looked at quite a horrifying stat this morning that said that 20% of the 18 to 34-year-olds regard social media as their most important source of investment, in comparison to 4% of 35-year-olds and above. But I think it's important for us to realise that publications who write articles then end up in social media. So I think you're reaching all kinds of audiences through engaging properly with the media. And there are certain columns, Tempus is one of them, but some of these fund pick columns where you can see a real direct influence by, one column appears and suddenly you see, retail investors piling in. So the next slide is just an example, and I'm sorry to kind of, do our own PR at Montfort, but this is one of our clients, Temple Bar. And, we have been focusing very much after the RWC partners took over this investment trust, which is why we were first brought in, on attracting the retail investor, and the rotation of growth to value was a very important part of that, but really targeting the Tempuses, the Merrion Somerset Webbs, to her podcast, her articles. And it has had a significant impact on the retail investor. And just as one example, Merrion wrote a piece on Temple Bar, and it achieved more hits on the website that day than all of the hits on the day that we announced the new fund management team. So the power of Merrion, and also the Telegraph Quester column, is unbelievable. So now I want to talk a little bit about how a board should go about actually looking at communications. And my belief is that an investment company needs to invest in their brand. And it's not just from a kind of PR perspective, but also working with marketing and sales teams, so that the 3 are working together to actually help to sell this product. I think there isn't a one size fits all, because it really depends on whether you're a board member of, a investment company that is, perhaps the only one in the stable of collective vehicles, that you may have to find a different model than if you're on the board of one of the investment trusts, where, there are multiple other investment trusts, and there's more of a kind of process behind that. So I think that, every board member needs to, think about what options do they have. Is it something that will be more in-house if they decide they want to take on the media in a more proactive way, or do they need to go outside and find an agency, maybe have a beauty parade? And you will also have seen that the makeup of boards has changed a lot, certainly since I became on the board of JP Morgan Global Growth and Income, which was 8 and a bit years ago. There weren't very many people like me then, in terms of, being recruited to think about, you know, brand and media. And now there are so many more board members. And I think it's about, you know, assembling a board where everyone is adding different aspects to the board discussion. But certainly I think that marketing and PR is on the board agenda a great deal more than it used to be, which is, you know, can only be good news. So one thing that's coming up is that the AIC are going to be launching a series of how to do this guides, and that's going to include PR as well as media. So watch out for that, but it's not till September. So in the meantime, I'm going to try and just give you a quick overview as to how I think the board should go about addressing the media. And I think finding the right message for your trust is really important. You know, every trust is different, you know, but think about what is your USP and, you know, is it well articulated? And then I think ensure that your fund managers engage. You know, some of them have a very different approach to the media. Some of them just like to focus on, you know, creating performance and say, well, it's not really my bag, but it needs to be their bag. And, you know, I think the board can put pressure on to do that, because the board can't be the media spokespeople. It needs to be the fund managers. And then I think create momentum and make that message simple. You know, make sure that the retail investor understands what you're saying to the media, or what your fund managers are saying, and don't let it be mired in technical language, etc. So there's a few other examples here of sort of thinking about angles, but in the just focusing on the fact that I've probably got one more minute. There are also other opportunities on the next slide where media advice is, you know, not just a nice to have, it's actually a need to have. And those are situations when, you know, the board might change their fund manager. You know, that is a generally quite a big news item. It also may not be a time when the board may want to use the internal resource on the PR side, if that's what they're using. So they may want to take on an independent PR company to help them do that. You know, if there's a merger, if there's, you know, any major reputational issue, and also if there's an IPO. You know, a lot of IPOs, you know, need to think about comms at a very early stage of the planning, because, you know, IPOing on the stock market is a sales process and you need to include PR in that. So I just included a little bit here because I know that some of you will have heard of Primary Bid. It's a new initiative which helps to reach the retail investor during the IPO process. I know that Edison also help on doing a piece of research that gets to the retail investor as well. You know, it has achieved a lot of success since it started. So finally, my view is that investment trusts are sold, not bought. If you sit back as a board member and just hope that performance will achieve sales, I'm afraid that I don't think that that is the future of helping to grow your trust. And if you're an ambitious board, I think taking on comms in a consistent way is a very important part of the route to take. Thank you very much.
Okay, thank you, Gay. Well, before we go on to Q&As, let's go back and try that poll again. So if Charlie could share the poll, and we'll give you a little bit longer. Right, okay. 2 questions just to remind you. So the first one is basically a scale question, 1 to 5 being very important, 1 obviously, and 5 being unimportant. How important are retail investors to your board? So if you would like to tell us your answer to that, just give you a minute just to do that. And just to remind you, of course, I guess this is really more focused at those of you who are non-exec directors at the moment of investment companies. And if we can move on to the second question, and if you scroll down to the right, you'll see we've given you 10 options, and I think you can certainly answer more than one, and there are 10 different options for the medium that you value the most to target this audience. I'll just give you a little bit longer, and I hope that's given everybody a chance to respond if they didn't the first time round. Okay, so perhaps we can move on to Q&A now. So we've got quite a few questions coming through. As you probably know, we try and give everyone a sort of fair crack of the whip, so you can all sort of have your say. I'm going to start happily. Our very first question, actually, from Rebecca Donaldson, is one I think that everybody probably wants to have a go at. So it is, do the panelists believe that there will be long-term changes in communication with retail investors following the changes in work practices caused by the pandemic restrictions and working from home? Where is it headed? This could be a very long response from people, but if we can try and keep it fairly snappy. Let's go to Moira first, please.
So my thoughts on this are people are changing the way they digest media, the way the time that they digest media. I mean, we're not commuting like we were. And I think there will be changes, and the last year has been transformational. You've seen a lot of media brands have sadly disappeared. Others have really invested, and I think you need to be aware that we're in a changing scene. I mean, obviously, my head's with video. Video is the massively growing area, but I think, you know, all other multimedia and social media could expand too.
Great. Okay, Gay, how would you like to respond?
Yeah, I mean, I think, you know, more bite-sized pieces, more shorter, easy to consume news and views, the way of the future. But I don't feel that, you know, I actually think people have got time to invest in research and, you know, focusing on how they want to invest and what information they need. So I don't think it's going to be completely transformational. I just think that maybe the way that we consume will be slightly different.
Okay, thanks. And Mickey, anything to add to that one?
No, just finally, communication like this, some of the numbers, you know, with 300 on today, and some of the conferences that have taken place in the last few weeks or few months have had a huge attendance, because you don't have to commute and spend hours and then wondering what you're going to do for the rest of the time. So but for retail clients, investors, it wouldn't surprise me if this medium was used more going forward for that sort of thing, short and sharp messages to actual investors at the end.
There's some fantastic, thank you, Mickey. There's some fantastic questions coming through, and I'll try and get through as many as we can. One good question from John Evans. In your experience, how many trusts have a marketing budget in addition to what their fund manager may choose to spend? Gay, do you want to just quickly pick up on that one?
Yeah, I think it's growing. I mean, I think, you know, look back 10 years and probably, you know, the marketing budget was tiny. I think a lot more trusts are considering, you know, what's the upside of increasing that? Is it something we have enough of through our relationship with our fund manager, or do we need to own that a bit more and create our own marketing budget? In terms of statistics, I genuinely don't know, and you know, certainly the AIC were kind of looking at how we could get more data on that, because I think it's really interesting, but I don't know the answer, and I'd love to find out. But I think it's growing.
Okay, thanks, Gay. And we touched on IPOs. We've got a question from Wendy Dorey. Hypnosis was one of the most successful investment trust launches in recent years. What did they do well, and what can we learn from this? Moira, can I ask you to take that one on?
I'm afraid I'm not so familiar with that, but I didn't see their media strategy or how they engage with that. I think we will have covered it with an article on Interactive Investor, but we didn't focus on it. So I don't think I'm the best person really to
I can jump in on that if you want, because I think I don't
Please go.
hypnosis, but I do think that, you know, this whole thing about music and you know, they made it very simple, and they also did a lot of really good photo stories of, you know, some of the music that they put into the trust. You know, you get some great photos of the Beatles and that kind of thing, and journalists just love that. And I think they just made the message very simple and attractive, and talked a lot about yield as well, which of course is what investors love.
Moira, let me see if this is a direct one for you. Now that Interactive Investor have discontinued the paid partnership, how can asset managers and platforms, II in particular, work together to distribute content to retail investors?
Well, I don't see us as a sort of distributor of all content. I see us as a platform, a curator of the best content. So I suppose it goes back to what is the story that you have to tell, and how can you present that in a really engaging way? Can you give us access to the manager? Can we work together to create something compelling for the audience? I mean, investors are bombarded with information from all angles, so we have to be slightly selective about what we put in front of them, with a view to putting as much as we possibly can, obviously.
Absolutely. Okay, thank you, Moira. Mickey, a question about how important is scale and liquidity to platforms. Are there too many small and illiquid investment trusts with the Me Too mandates? Do we need fewer but larger?
Well, I dare I say, I suspect there's consolidation is coming down the road, but not driven by me or platforms. I just think perhaps it is. Liquidity is an interesting one. I mean, certainly for investors like ourselves at Smith and Williamson, it's something that we're mindful of, and it would be a shame if retail investors get caught up in that, because, you know, there's an opportunity for them to invest in companies, whatever the size of them. I'm not sure if platforms, I think, are concerned. Some of them, obviously the big one like Hargreaves Lansdown, of liquidity. You know, if they do an article or a story or push something, you can see how quickly the demand can rise for it. So I think they're more mindful now than perhaps they were some years ago.
Thanks, Mickey. Let me see if I can run a couple of questions together. There's a question from Marianne Siegert on how effective is paid advertising, and is it better to advertise in traditional personal finance publications or digitally via social media? And then there was a sort of question that might link in. There are lots of restrictions on marketing to retail audience, especially on social media, and these rules can impact the power of the investment company's message. Any tips on that? Can I have a volunteer to take that one on? No volunteers. I'm just going to.
I'll have to go.
Okay, perfect. Thank you.
I think that what can work very well is sort of unpaid PR working very well with paid PR, and I think there's a lot of opportunities out there for, you know, helping to educate your investor through the paid medium, because, you know, journalists are there to write news and views, they're not there to write marketing stuff. So I believe that if a trust can afford to or make the case to spend some money on paid content, then it complements the PR very well. I can't remember the second half of the question, sorry.
And I think I have gone, oh, hang on. The second half was restrictions on marketing to the retail audience, especially on social media. And the rules can impact the power of the investment company's message.
Yeah, I mean, you know, we work with the compliance teams of all of our clients to make sure that we're, you know, not looking like we're marketing the trust through social media. You've got to make sure that it's very factual. It's not looking like it is a encouragement to buy. It is just information, and you have to be, you know, super careful that you don't go over that line.
Okay, we're beginning to run out of time, so let me perhaps just take one or two rather brief questions. One from Hugh Van Cutsum. Do we not need to see the FCA give better or perhaps simplified guidance on retail marketing, as there definitely appears to be a blockage on this front and managers are fearful of engaging too highly with retail? Mickey, would you like to take that one, or Moira?
I think Moira do a great job.
Moira, would you like that one?
So engaging with retail and the regulatory restrictions around that. I mean, honestly, it's yeah, we definitely need to engage. I mean, there's a whole load of engagement going on social channels, on TikTok, and we've seen the Reddit. The younger generation of investors are all over that, and they are there in their droves, and they're following influencers who are often complete jokers, and they're gaining massive followings. And I think, if we as an industry cannot have a greater presence on those channels, we're gonna end up losing out, because other younger investors won't see the sensible investments that we're delivering as an industry.
Mm-hmm. Do you know, there are just so many more questions and we could really go on, but perhaps if I can just round up the Q&A bit for this with a question, which is, do investment trusts actively seek feedback and opinion from individual investors? And if so, what are they trying to find out and how do they go about it? And if I could have a really short response from each of you, that would be fantastic. Shall we start with you, Gay, please?
Yeah, I think that it's only beginning, and I don't think that we actively solicit enough feedback. I think AGMs used to be a really good opportunity, but realistically, you're not seeing a good enough cross-section of your investors at AGMs. I think, sorry, someone's at the door and I can hear my dog barking. I think that, things like the chairman having a Q&A on the website's a really good idea. And, we just need to encourage more interaction, because it's really interesting when you know what your investors feel, and then you can respond better.
Absolutely, great. And Moira?
Well, polls on websites work really well for us in terms of getting information from our customer base, and we started experimenting with polls on social too, so you can gauge, quickly gauge a few thousand people's responses. So I think, maybe pursue that.
Okay, great. And Mickey, anything just to add before we go on to results of our own poll?
It's all about communication. It's all about communication, isn't it? Which is what we've been talking about this morning. And the more communication, you might not like some of the answers that you get, but at least you can act upon them. So the more communication, the better, I think.
Fantastic, great. Well, since we obviously have our own poll and we've talked about the importance of such things, so just a minute, and I should say that this webinar is being recorded and it will be put on our own website at Trust Associates, and Edison will also have it available as well. So if you want to have a look at this retrospect, or indeed any of the slides that were included, they will all be available afterwards. But interesting poll results. Yes, so everyone, perhaps not surprisingly, saying that retail investors are important. And if we scroll down, I think financial PR, you'll be delighted to see, Gay, is up there in terms of its importance, and some other interesting results as well. Fantastic. Well, thank you. Let's give the normal sort of thanks to our speakers for a really interesting, we could have gone on for so much longer. So thank you, all three of you, for obviously giving us such an interesting and informative session. Really good, and thank you for that. Thank you to our audience, obviously, for attending. We hope you found it useful. As I've said, our webinar will be available, so you'll be able to look at it again if you so feel or so wish. And we look forward to welcome you to our next webinar. And we'd also be delighted to hear your feedback. So if there's any topics or any areas that you'd like to us to take up on your behalf and get panelists to speak on, please let us know and we'll certainly follow that up. And finally, thank you very much. Enjoy the rest of your day. Thank you.